Hi, this is Greg. Welcome to the channel. On this channel, we talk incessantly about markets and investment and how to make you a better and richer investor. And this episode is right down the fairway in terms of making you richer because it's all about how to profit during a market sell-off. Now, with everything going on in the world right now and with the season that we're in, basically the fall season, it is historically a very volatile time in the market. And while you might be concerned about preserving your losses during this period, you should also be thinking about how can I make a shitload of money. And I promised you on my last little teaser video that I put out that I would come out with a video to show you exactly how to profit in a downturn. And that's what we're going to do right now. So if that's of interest to you, stick around because it's coming your way. Hey, so before we get into it, if you get value out of this, please subscribe and like. Helps me out a lot with the channel. And it'll make sure that you're on board and you're notified of future videos that'll come your way. And actually, there's going to be an action that you'll have to take after seeing this video because I'm going to give you the exact timing of when to go in on this and also when to sell. So if you're not subscribed, you're not going to get the notifications. Don't forget to hit the bell. Actually, smash the bell. And if you're not subscribed and you don't hit the bell, you're not going to get notified as to when to take these action steps. Okay? So with that, let's get right into it. Okay, before I get into telling you exactly what I'm going to do, and therefore something for you to consider, let's talk for a second about the risks out there and what could precipitate a market sell-off. Not just a market sell-off, but a significant market sell-off. The number one concern that I have right now, which is coming to the fore in the various news cycles, is inflation. Now, I have been railing and discussing and giving you my opinions for months and months and months now, and if you're a subscriber, you're probably sick of hearing me talk about it, but I have been talking about how I think inflation is a significant factor affecting the markets. Chairman Powell, the Fed chairman, has been saying for at least 9 months, maybe a year, that he thinks that inflation is transitory, and lo and behold, he comes out this week and he says,
I think that, it looks like inflation's going to be not so as transitory as I thought, and I think it's going to be here for longer than I expected.
Great. So now he's talking about tapering finally, and he's talking about not only tapering sooner than he was predicting, but also the potential of within the next year actually raising interest rates. Meanwhile, the 10-year has gone up to about 1.5% from in the 1.2, 1.3 range. So the market is making an immediate adjustment to the 10-year rates. Second thing, the political situation in Washington is a complete freaking mess. If you've been following it, we basically have an incompetent president, a guy who's not only mentally challenged, but just completely does not have control of the subject matter that he needs. The things going on in Washington are just astounding to me. I've never seen anything like this. But in addition to the disastrous withdrawal in Afghanistan, his war on fossil fuels, which I've talked about on this channel, which contributes to inflation, probably the biggest near-term risk that I see is this wrangling going back and forth on the infrastructure bill, the $1.2 trillion infrastructure bill, and also the $3.5 trillion tax and spend-a-thon. I also call it the tax and spend orgy. Who knows how these things are going to resolve themselves. The Democrats, even though most of their ideas are horrible for business and horrible for us as traders. And I could do a whole video on that, but I won't talk about that now. They are pretty good at figuring out these gimmicks and different ways to get things done, even if they have to ram it through reconciliation. So I think they'll figure out something. It won't be good for us as investors, won't be good for the economy, but they'll probably figure something out. The biggest concern right now is the debt ceiling and the impact on the potential default in the government's default on its bonds. If that ever happens, and apparently we're going to run out of money October 18th. We'll see if that happens or not. But if that happens, that would have dire short-term consequences on the stock market, probably causing a huge sell-off. But again, Washington, these people in Washington will figure it out somehow and we'll get back on track. So that would be an enormous buying opportunity. Third, the geopolitical situation. There are many, many risks geopolitically. I won't go into all of them here. But one thing that I think you should keep an eye on, which nobody is talking about really, is the current energy crisis in Europe. Oil has gone up. Gas prices have gone up massively. They were too dependent on wind power. It's just turned out to be a total cluster bleep. And keep an eye on that, because if this energy crisis that they're going through right now trashes first the European economy, which it looks like it's currently doing, especially in the UK, that could have dire consequences for the entire world economy. So keep an eye on that. That's another geopolitical risk. Okay, so having said that, I mean, there's always risks around, but I think the near-term risk of the debt ceiling and the default on the debt is probably, or fear of that is probably the greatest thing that we can look at as it affects us and what we're doing. Okay, so having said that, let's get into the subject of this video. Let's look at where things are in the market and what my specific recommendation is for how to profit in a downturn. Okay, so as I often do on this channel, if you've ever watched this channel, you know I go into my trading account, and that's how we discuss various strategies and stuff like that. And as you can see here, I'm going to focus on the Nasdaq Composite Index because that is where I see the most trading potential for an extreme downturn, or even a more modest downturn. Okay. Now what I have here is I have the 3-month chart. This is what shows more dramatically than a longer term what's actually happening. And you can see, even in the last few trading sessions since the beginning of September, well, going back to the middle of August, we had a big run-up, and now we've had a big run down in the index, so that we're at roughly mid-August levels. Now, the reason I'm focusing on the Nasdaq is because in addition to having the large cap technology stocks like Apple, Microsoft, etc., there are other stocks in this index that are at extremely high valuations and will be extremely vulnerable to an increase in interest rates, or even a perceived increase in interest rates. Okay, so what is the best way to play this as a retail investor? You're not going to be doing futures, you're not going to be doing options on indexes and things of that nature, most likely. What I am presenting you with is an extremely simple, relatively safe strategy, and that's what I'm doing here. So that's why we go to the Invesco QQQ. This is an ETF which exactly mirrors the Nasdaq. Here it is. This is what's happened in the last 5 days to it, equally ugly from what we looked at before. You can see what is in the index here. It's what you might expect, the usual subjects: Apple, Microsoft, Amazon, Google, Facebook, Tesla, Google, NVIDIA, etc., Adobe, whatever. So this is intended to mirror the Nasdaq 100. Now, there are two basic strategies that we can employ here. Okay, one is going long the 𝐾𝐞. Okay, that's one thing I'm going to talk about. The other is selling options, selling puts on the 𝐾𝐞. I only recommend that for more advanced traders, and I'm not going to talk about that extensively in this video. Or going long the 𝐾𝐞 at the correct time, of course, or, and this is the idea, because I assume that most of you guys are, aware of what the 𝐾𝐞 is. If you're not aware of it, you're aware of it now. But here is the way I'm going to play it. I'm going to juice it up with the 𝐡𝐾𝐞, or the triple leveraged 𝐾𝐞. Now, why am I going to do that? I'm going to do that because for every dollar of value that the Nasdaq or the 𝐾𝐞 goes up, the 𝐡𝐾𝐞 goes up 3 times. So it's a leveraged ETF. I think it's really cool. And the only caveat that I have for this, and I'm a pretty big risk taker. If I feel comfortable owning the 𝐾𝐞, I'm going to feel comfortable owning the 𝐡𝐾𝐞, because why wouldn't I want to be leveraged on the way up? But what's important for you to understand is, let's just take a look at what this actually is, okay? The investment seeks daily investment results before fees. It corresponds to 3 times the daily performance of the Nasdaq 100. Okay, great. That's all fantastic. But what I want you to understand is look at what they're actually investing in. Okay, whereas in the 𝐾𝐞, they were investing in specifically stocks, right? All of those large and smaller cap stocks that comprise the Nasdaq 100. In this, in order to get the leverage, they are investing in swaps, okay? Swaps on the Nasdaq 100. So essentially, they're using derivatives to get this 3 times leverage on the portfolio. Now, the thing for you to understand, oh, look at the bottom here, they actually own Apple directly too. So, but primarily their top holdings are in swaps. Now, what is a swap? A swap is essentially a financial agreement between 2 parties. In this case, is the fund and these various counterparties here: Societe Generale, Bank of America, UBS, Goldman Sachs, Citibank. Okay, they're all enormous, well-capitalized banks. But you have to understand, in these derivatives, there is counterparty risk. So in addition to taking market risk, in this leveraged ETF, you are also taking counterparty risk in the unlikely event, extremely unlikely event, but nevertheless, there is a risk that one of these counterparties could, go out of business or become insolvent, etc., and not make good on those swap arrangements. And in that case, the swap investment would go to the big football, 0. Okay, so keep in mind, you are taking additional risks here, but in my case, I feel that that is a risk that I am willing to take to get the leverage, because there's always risk in leverage. Okay, now the last thing I want to talk about is timing. And as is always the case on this channel, there are some technical indicators that I use. I just want to give you a quick sense of what I look at. But the thing I want to tell you is that I am going to come out with another video when I put this trade on, and then I'm going to have another video when I take the trade off. So if you are a subscriber to this channel, you're going to know exactly when to come in and get out of this if you choose to follow how I'm approaching it, okay? Got to do your own research and be comfortable, but that's the purpose of watching this channel, because you get to trade right along with me. Now here we have, I'm going to go to 3 months, okay? And what we have here are my indicators. This middle line is currently set at the 20-day moving average. I'm going to change this to the 50-day moving average. Update. Okay, and we can look at that. Okay, so as you can see, the recent sell-off, and these are the Bollinger Bands. This is the slow stochastics, relative strength, and momentum. Okay, and down here we have money flow. Now, the two that I look at mostly are this top one, the Bollinger Bands, and the slow stochastics. Once those two line up, then I look at these as confirmatory technical indicators. But what I want to do is let's go a little bit, let's go 1 year out, and you can see really what this has done. And let's see if we can get a slightly bigger version of this. Yes. Okay. Move it up here. So let's take a look at this. You can see these are the periods that were just massive buying opportunities, right? When these two lined up, this pierced the 2 standard deviations below the 50-day moving average. This one, that would be another indicator, even though it didn't pierce the Bollinger Band. This slow stochastic is showing that it was extremely oversold. You can see what happened after that. You could have made a ton of money there. Also here. Okay, you have to take some of this with a grain of salt, because depending how tight you want to be on these upward moves, and how much risk you want to take, there is some qualitative interpolation here. But you can see in the first few weeks of March of this year, you could, if you bought here and wrote it up to here, that would have been, and you would have gone from 80 to 140. Okay, that would have been a pretty nice trade. Okay, so these are the types of things that I am going to be looking at when I advise you. You don't personally have to get obsessed with this, because I am going to guide you through this and show you when to go in. Okay, now let me preface all this by saying that no one can really predict when the market is going to sell off or rally. Daily predictions of price movement are literally impossible to do. The reason I wanted to come out with this video is because seasonally we're in that period of traditionally enormous volatility, and there are so many things going on in the world that could trip up the market. Inflation and what's going on in Washington being the two biggest, and I just want to be prepared to put this trade on in the event that the Nasdaq gets crushed. Now, the other thing I want to emphasize is you have to subscribe to this channel in order to get the updates, so you know when to go in and when to sell. So please, if you got value out of this, if this looks like something that you want to get involved with, if you want to make a shitload of money, I don't know why you wouldn't want to, but there are some people that prefer to be poor. But if you do want to make a shitload of money, I would advise you to subscribe right now. Like this video, because it helps me tremendously. And stay tuned for future videos so you can get these updates coming down the pike really soon. And it was a pleasure doing this video. I hope you enjoyed it. And stay tuned for more videos which will be coming your way very soon.